Hi, I'm Jarrett Davis, and I was ranked as the second best performing Forex trader in the world by the Barclays Currency Traders Index. Now, the reason for this video is first of all to thank you guys very much for all your questions, comments, your stories, everything you've been posting to the content that we've been putting up online over the last few months and weeks has been absolutely fantastic. So thank you very much for that. Now, the purpose of this video is basically to address some of those questions. So you've obviously been wondering various different things, watching the videos, reading the posts has obviously thrown up more questions that you guys have been wondering. So what we're going to do is we're going to take a question in this video and we're going to attempt to answer it in a clear way so that you guys can actually benefit from that and go and apply it in your own trading. So the question I picked up is a very popular one, and it's basically very simple as well. The question that came in is how to build a trading strategy. Now, what I'm going to do, obviously that is a question that could be open-ended. So what I'm going to assume is that you want a successful trading strategy, first of all. You want that makes you a consistent profit. Now, the way to do that, in my view, is that you first of all need layers. You basically need to have an idea of what layers you need when building a strategy, kind of like building a house. So first of all, you need to dig the foundations. Then you need to build the walls, and then you need to put the roof on, and it just works in a layered process. Okay, you don't put the roof on before you put the foundations down, etc. So with a trading strategy, it's exactly the same. So what's the first layer? The first layer of building a strategy, in my opinion, this is what's worked for me, is having a solid grasp on the fundamentals, understanding what is moving the markets, understanding which currencies are likely to move in which direction, and most importantly, the reasons why. You need to know at all times, whichever way a currency pair has moved, you need to recognise that it's moved, but then find out why. That's your first port of call, because that will give you a tuning into the markets, it will give you an understanding, and most importantly, it will give you confidence in your trading. That's the first key. If you've ever swapped strategies, if you've ever had different systems and you've kept swapping, you can't find one that works, that's the problem, because you don't have the confidence. So the first layer is to understand the fundamentals and grasp them. The second layer is to basically have a method of entering the markets and managing your positions that makes sense to you. So for example, for me, I use technical analysis. A lot of people think I'm against it. I'm not totally against it. I'm against solely using technicals. I'm against people who just look at a chart and nothing else and try and figure out which way a currency pair is going. In my opinion, that's nonsense. It's never going to work. So I use technicals, but with that first layer of fundamental analysis intact. So how I do it is I use support and resistance. So if I'm looking for a currency to go up, say for example the pound dollar, I'm looking for it to go up, I won't just buy it. I will ideally look at the charts and I'll say, okay, as this currency pulls back and goes down, where has the market been buying it from? So it's called support and resistance. So there'll be areas of support on the chart clearly visible, where you can see the prices come down and then gone back up. Look for these really obvious places. Okay, I also use figures, so 00 levels, so like 167, 100, 16800, 16900, those 00 levels, and of course the 50 levels are also quite powerful too. And I also combine it with Fibonacci, so if I put the Fibonacci on it and you've got nice retracement levels, if you can get a nice confluence of these things overlapping, so a nice previous level of support overlapping with a Fibonacci retracement level, some kind of solid area from which the market has already been buying or selling, that's a great starting point to enter a trade. Then you can use that same technique to manage your position. So if you want to use stop losses, you can use those levels. If you're buying from support, you can place your stop loss just below that support, because we're expecting that support level to hold. Okay, very, very simple. And the same with profit targets. If the price has rallied up and then it's pulled back and we get it in here, then the price goes back up to these old highs. That's where I basically look to take my profits. So very, very simple strategy. So the base is the fundamentals, then we need something that we're comfortable with. Doesn't have to be support and resistance, you can use whatever you want. If you have a technical system, okay, one of these black box systems that gives a blue signal for buy and a red signal for sell, or something along those lines, or you've developed your own strategy but can't quite get it to work, you can use that, because if you're using it in line with fundamentals, the chances are you're going to have a much higher success rate. So whatever works for you, basically, whatever you're comfortable with, but you have to have that foundation layer of the fundamentals and understanding which currencies you should be trading and the reasons why. If you haven't got the foundations, your house is going to fall down, and that's the same with your trading strategy. So hope that's helped. That's a very common question that we get on how to build a trading strategy and what to look for. That's my advice, and hopefully you guys can take that, use it and make some pips.